rundown for today. I'm really excited to have Kevin, Eric, and Stefan to join me on this panel. So I'll let them turn on their camera. So I'm just waiting for Stefan. Woohoo! Great. Well, glad to see you all. Thank you for joining. So obviously everybody knows a little bit about us. I just gave down my intro, so love for you all to do the same in terms of your position and the organization that you work with, and specifically, right, in terms of the innovation or entrepreneurship side. So I'll go with you, Eric, then Kevin, and then Stefan.
Sure. Thanks, Jessica. So hello, everyone. My name is Eric Bloombergs, and I'm with Honda Innovations. And first, I'd like to really thank Kiwi Ventures, and more specifically, Jessica, for this great opportunity to engage with the venture ecosystem. So I'm currently Managing Director of Alliance Development for Honda Accelerator, which is the investment and open innovation program for all of Honda. So I guess we're definitely the right organization to be speaking here today. So Honda Accelerator was designed to engage startups really at all funding stages. We are basically the front door for all startup engagements globally into Honda. So through Honda Accelerator, startups have the opportunity to engage with Honda through either a proof of concept collaboration or be considered for investment and possibly merger and M&A. Our global headquarters are located in Mountain View, and we have global outreach with Honda Accelerator satellites on the East Coast, in Europe, Israel, Japan, and China. We also have a very broad scope of engagement, and that really reflects in our diverse product portfolio. People think of us as a car company, but we do a lot more than cars. We do automobiles, motorcycles, ATVs, side-by-sides. We do marine products. We make a jet, smart manufacturing. We do robotics applications. So we really have a diverse product portfolio. So basically, we engage with ventures involved in anything that can support these areas. So energy, climate tech, renewables, fusion, electrification, mobility as well. And this includes land, sea, and air, and of course, robotics and manufacturing. And finally, our 2050 vision of carbon neutrality for products and processes, and also zero fatalities for vehicles and motorcycles are really main drivers for our innovation investment activity. A little bit about me. I've been with Honda for the past 11 years. My first 5 years were spent in Honda R&D, working with our teams, focusing on connected and automated vehicles. For the past 6 years or so, I've been supporting Honda Innovations Honda Accelerator program. Prior to Honda, I spent 10 years with Alpine Electronics, which is a tier 1, so pretty heavy automotive background. With Alpine, I spent time in strategic planning and partnerships, advanced research, product planning, and my technical focus with Alpine at the time was telematics, in-vehicle wireless communication, smartphone integration, safety and human factors, blah, 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 blah. So I've seen pretty much everything for the past 20 years in the automotive space and the kind of consumer tech space as well. And the changes have been really amazing. So that's a little bit about me, and I'd like to hand it off to the next panelist.
A lot. No, that's great. Thank you. I'm very pleased to have you here. And Kevin?
Sure. Well, I'll echo Eric's comments. Great to be here addressing the group. So I'm Kevin. I'm a managing partner of our venture investing and CVC practice here at Mach 49. So Mach 49, we were started back in 2014 with a pretty simple premise, which was the idea that corporates belong in the innovation ecosystem. They should be here. And traditionally, where all the pain has come from has been primarily because of a lack of best practice and experience coming from entrepreneurship or venture capital. And so Mach 49 was really created to kind of help accelerate and drive corporates to be that next generation engagement within the ecosystem. So at Mach 49, there are really two halves to what we do. The other half of our business, we're a venture studio. We've helped groups like Schneider Electric, Stanley Black & Decker, PwC, Silicon Valley Bank incubate new ventures and create new studios internally. But the practice that I helped start is really focused on the complete opposite. And I think the topic of the conversation today which is external engagement. And so for us, we're most well known for our work in CVCs. We're rather unique in that we actually do not have a CVC as a service model. We have a teach a man to fish model, where we really pair up emerging CVC funds. We help them get the approvals from their boards. But instead of taking control, ownership, or any type of economics from these corporate funds that are emerging, we actually just pair them up with an experienced ex-general partner from traditional venture capital, open up our networks to them, and accelerate what it is they're doing on the investing side. I'm pleased to say over the last 3 years, we've helped now set up over $1 billion worth of corporate venture capital across multiple sectors. Some of the names you guys might recognize, that's TDK Ventures, which is $200 million for hardware and deep tech, Goodyear Ventures, which is $100 million into mobility, Pernod Ricard's Conviviality Ventures, Gunderson Health System out of La Crosse, Wisconsin, Xerox Ventures $250 million fund. And as you guys can probably imagine, climate tech's very big these days, and everyone's, trust me, there are a lot more corporate funds coming in the beginning of next year that I can't tell you about just yet, but there's going to be hundreds of millions more dollars going to climate tech.
Love it. I think
Yeah.
that's where, all of you guys should we should definitely tee up and talk about that. I'm in Tahiti for the Tech for Island Summit, and I'll be talking about climate tech, but specific to ocean. But glad that you're here, and exactly, you have you're on the front line of the CVCs. You really see, so from that side, it's awesome with the array. Stefan, to you, thanks for joining from the other side, or I guess we're pretty globally diverse right today.
Yeah, we have just small C between you and I, and thanks for inviting me here. I'm from France, as you can guess, and thanks Jessica again for this great opportunity. So I'm representing Lacroix Group, which is a French company, international, right? We are operating in we design a lot of products, electronic products, mainly, but not only, and we manufacture a lot of electronic products for different markets, and I will describe a bit. But we have our manufacturing and design center in Europe, North Africa, and North America and Mexico as well. This is where we are really spreading there. What we aim to is to be one leader in IoT and application with IoT type of technology, Internet of Things, where today we have a line where we design and manufacture any kind of electronic products. Is where we see for big companies, but also from some startup. We help some startup to scale up after they done their MVP, for instance, we also have our own product line within two main areas. First one is smart mobility, where we are more in the infrastructure side of the cities. We connect car, we connect traffic light, we do street lighting management and everything to save a lot of energy, to save people also, to make the road much safer. And we communicate, of course, with kind of technology like V2X, autonomous vehicles. We try to help them to drive safely there. And we're more so one big part is on a smart environment. Okay, it's pretty long to do this for half a century, but now is back to something way more. We say on the front line of the news, because we are helping to manage a water network, and water this year was a big issue, especially in Europe, but also I know in North America and some countries. We do this also for energy in the smart grid area, and all this management of energy within buildings and outside buildings. So it's a bit wide and spread. So, and my role is strategic innovation and partnership. So I'm here, to talk about ecosystem, partnering with big companies, but also sometimes with small companies, having project. We have a lab, innovation lab, where we do proof of concept and we help a proof of concept to move to MVP. And we work with startups and but also any other companies which can help us to innovate and help our customers also to solve some big problems, big challenge like what we have in smart cities, for instance. So great to be here.
Great, Stefan. Thank you. I definitely see you and Eric should definitely cross collaborate on cross countries. I think
Yeah,
it's
absolutely. Yeah.
Cool. Well, let's dive right in terms of the pulse. I mean, we're in Q4, right? There's been well, the one that I was telling Eric earlier, like the Figma, right? Like how that one was at. Yeah, that was a nice one. But would love to have from your side, right, out of this quarter, if you're going and also getting on a shopping spree, or for the CVCs that you're representing, and then how is your strategy kind of wrapping up with how the market is going into 2023? Eric, if you want to dab that.
Sure. So obviously the market conditions are pretty tough. Capital is definitely much harder to come by for startups. I was just reading the other day, I think Crunchbase came out with their Q3 numbers, and they were not very promising. I think Q3 funding was down like 40% from Q2, from like 62 billion to 40 billion, and year over year, Q3 funding was down 53%. So things aren't great. So what does that mean for corporates? Well, I can speak only for Honda. The good news for us is that as of now, we still have funds dedicated for startup investment, and we're still actively engaging with startups. So Honda, our engagement model for the past 5 years has really been focused on proof of concept. So we're structured so that I'm the outward facing team, and then we have another team in Honda Accelerator that is inward facing. It's a bunch of former development engineers that really understand the needs of Honda. So together we pair up that opportunity, the startup opportunity, with the right BU to help spur the collaboration. And it's been usually proof of concept. Once in a while, we do an occasional investment. However, earlier this year in April, our CFO announced that Honda will allocate 10 billion yen starting this year per year for investment in startups, for advanced technology and business models. So 10 billion yen is, it sounds more impressive in yen, but it's about 75 million to 100 million, depending on the exchange rate. So that's allocated funds off, out of our balance sheet that we can invest. And of course, we can't invest that much every year. We have to save some for follow-on. So as it stands today, we're actively engaging with startups for both collaboration investment. So nice. and we look at seed, Series A, and Series B.
Nice. No, that's good. So from the POC, that's where you can follow on as well, right? So on that side, and to you, since Stefan, you were mentioning as well, you do some POC. Is your on right? Are you focused then? Have you had some change into getting also into a fund structure, or still focusing on POCs? And
we this is until 1 month ago, Jessica would tell you we're not going to fund any startup or any company, but it's changing now. Okay. Okay, this is quite because it's changing now. That's pretty crazy, because that's not the best time. However, is not our preferred model. We are definitely more helping some startups to scale up, as I mentioned to you, with our competence, with our network. We've done this in medical segment, and for a pill that you can swallow and give all the a lot of parameters of your bodies. So we have done this kind of project there. However, for some key markets where we need complementary competencies, then we see a real need for us to get some funding. It's more the funding is more to have a stronger link. We don't want to own any kind of these companies at least at the beginning. So, and we see also now, because there is funding is tough. We see more and more startups. They want to get a backup from an industrial guy who can give a credibility of what they want to sell as well. So, and this makes a lot of sense. They are maybe less looking at VCs, okay, but more on the credibility, on to make sure that they have a sustainability of their business in the medium term as well. So, and again, environment now has become key. Okay, Kevin, I think you mentioned this as well, and we see because we are pretty big on this part of water and the energy and smart cities. We see also more and more request from these companies to try to work with us on this one. Yeah.
Got it. So so no acquisition, no shopping on this side for this year or coming up?
Yes, we are on the opportunistic way for specific competitive advantage or to complement some lack of expertise on know-how. Yes, we are going to acquire. We acquire a company this year. We are going to acquire. We can acquire 2 companies. We are going to acquire more companies in the North America because we want to increase our footprint in North America in the water network. So this is cool, right, guys? Water network management and all the products and software that you can or hardware you can get around is a cool. Yes, we are going to invest for sure in this one, but it's really to help us to grow and not to plant some seed to try to get some
right. Not a new market, but
not a market. Yes.
Yeah. So for the investors in the audience, I think there's like 40 plus in here that have water, right? So you're looking for
water is one, street lighting is another one, and traffic management is another one. These are the 3 key we say markets we are going to invest and we are going to acquire a company or at least to put some nice amount of money in.
Right. So shopping versus investment, and then for startups more PSC. That's where Lacroix is. Okay, how about you, Kevin? You have you dab into different industries. I mean, we've talked a lot in terms of sustainability and stuff. So I'd love for you to tap into like the SaaS as well for the others, right? That may be more from that side as well, or healthcare.
Yeah, I've been this is not the first time I've been asked this question in the last months, and I've usually a pretty long answer that I'm going to try to condense down a bit. So short answer is great deal season right now. I think it's going to last about another month and a half, mainly because the seasonality of venture capital is back. Most of you probably noticed most of the VCs weren't really responding to emails during summer because they were all in Europe, finally on vacation again. And then once Thanksgiving and Christmas holidays come around again, it'll probably be another slowdown. But, the first thing I noticed when I came back was, normally what is a very sleepy partner meeting with one of the CVC funds I work with, all of a sudden we had 6 deals on the table that were all actively fundraising. And so, one, this is a good thing. And for us specifically, one of our thesis points, one of the things that we're trying to make the industry do more of is no fair weather investing by corporates. So every fund that we work with, that we've helped set up, that I continue to support, we don't really do what's called balance sheet investing. We have committed capital over a series of years, specifically for opportunities like this, where even if public markets are going down, we have money to be able to invest. Skipping ahead, I'm sure a question that's coming later. Whenever you guys are working with a new CVC, as a founder, that should be one of the questions you ask. Is the money coming off the balance sheet, or is it coming out of a committed pool, or is it coming out of a fund? It'll help you understand whether they can follow on, whether they can be long-term investors. But what's really nice is a lot of deals that were ultra competitive to get into last year and very hard to explain to the executives why they deserve a honest hand to God 25x next 12 months revenue. All of a sudden are seeming very reasonable, good deals now. Now and so all of the corporates, we work with, all of the CVC friends in the ecosystem that we frequently collaborate with, ready to deploy lots of deals. The challenge though is that we just don't have traditional VCs leading rounds as much because they've gotten pressure from their LPs not to deploy more checks and not to call capital basically up until beginning of 2023. And they're, unfortunately, I can't share any names there, but I've heard direct anecdotes from endowments and pensions where they've told their VCs, don't ask me for any more cash for the rest of this year because my portfolio is out of balance, which indirectly will then impact the CVCs because most CVCs tend to want to follow traditional.
Yes.
So it's a bit of a yes, but answer.
Right. Yeah,
Yeah.
no. And
Just as a,
Sorry.
sorry, Jessica, just as a follow on to Kevin's comments, we're actually experiencing that. So like I said,
Yeah.
we have money to invest. There's some deals we're looking at, and it's hard for the startup to find a lead investor. And we don't like to lead, we like to follow. So yeah, we've seen that actually, Kevin, in practice very recently.
yeah, and that, I mean, thanks, Eric, for sharing as well, you know, right from internally where you're seeing, because as well for us, we're seeing a lot of our startups that have, I mean, not from a CVC, but other investors that may just are not lead. So finding a lead investor is a little bit more challenging this times. But sounds like you still have dry powder. So it's yeah, it's still happening. And from there, I guess, you know, what are some of the advices or that you're having for the startups, right? For on your side, Eric, what are some of the tips that you're looking at to share in solidifying a lead, or is it a waiting game? Are we just then, you know, do a wait or go with like Stefan, do a POC, then, you know, like what? Yeah.
Yes, I think, you know, it, you know, it depends on the startup, but for us, you know, Honda likes technology. So we engage with a lot of tech startups. So we still encourage POCs, but we're being a lot more cautious with the startups we work with. And when we work with a startup for proof of concept collaboration, especially with a strategic, you gotta let them know, you gotta be patient. And also the startup needs, if they want to engage, they have to be very smart in their engagement. Sometimes they'll just want to engage with a strategic so they can broadcast it and bring investment dollars in, but you can get tangled up pretty quickly with a long POC that doesn't go anywhere, you know, and sucks time away from you that you can be spending on other more important things. So be smart. And then when, you know, we get a lot of pitches, and I say, be prepared when you pitch as well. Have a good communicator driving the pitch. So we run into this, especially with early stage startups where it's a technical founder and he's leading things. And sometimes they won't even put a deck up. They'll start meandering in this stream of consciousness, you know, dialogue about their technology, and we're just going, hey, do you have a deck? So be a good communicator, have a good, clear, concise deck, have a good story, define the problem, your solution, understand your market that you're in, the position, clearly explain your uniqueness. We're really big for Honda on uniqueness and also the defensibility of your uniqueness, whether it be a business model or technology. And in the end, of course, you have to be financially viable to survive. So that's important. You have that covered. Don't oversell yourself when you're talking to potential corporate investors. We get a lot of companies, especially tech companies, that make claims about their technology, the specifications. And what we like to do before we invest is evaluate it. We'll call it an evaluation of proof of concept. So we'll evaluate things like next gen battery cells. And a lot of times when we do our vetting and evaluation, our results don't come anywhere close to the startup results. So, you know, it's better to be honest than oversell. And that gives us a bad image of the startup after that happens. You know, and there's a lot of resources for startups as well. Get engaged in your communities, in the venture community. Have a great network that's going to help you. And also there's a lot of resources. There's still a lot of good accelerators, you know, Skydeck, the Engine, Y Combinator, Techstars has a lot of good accelerators. Use those resources. And again, if you're high tech, also the government through SBIR has a lot of resources of NRE that's non-dilutive funding. So that's great as well. So that's just some of my thoughts.
Yeah, no, thanks, Eric. Stefan, to you.
Yeah, I would be, I would say, now what we expect and what we see more and more, is to make us dream, right? But to have the feet down to earth, right? To be very pragmatic about what they achieve. And I think now we're really looking at this one. We love startups with great communication, Eric, and it's very important as well, right? Because it's difficult sometimes even to understand what they really want to achieve. and how they achieve it becomes even more important now, especially with some concrete facts about some key achievement. And key achievement is not about okay, I've seen I have 5 meetings with big guys, and they say it looks great. It's nice now, but we want way more than that now. Okay, we definitely want to have some concrete feedback, some even starting to have some revenues, and to make sure they are starting really to fly. This is what we are looking for on our side, right? And they have some maturity about how they scale the business as well, even though we can help them. But just a simple example, we're more on the hardware side, so which is always difficult for startups, right? But to have just some maturity about the cash flow management, about what you need when you make your product, you sell it, it's great. You have great selling, but you need a cash flow, right? Otherwise, after a couple of months, you are dead, even though you are doing great business. So we need to have this level of maturity, which is maybe sometimes not there yet, as well.
Yeah, yeah, no, yeah, capital. Yeah, like you said it very candidly. No cash flow, you're dead. That's where angels pop in when you're at that stage, or early stage VC, although some, as we've mentioned, are not as leading. To you, Kevin, in terms of for startups and especially, right?
Well, I'll caveat everything I'm about to say and say I'm I've done partnerships, POCs, and accelerators before myself. But since I think everyone's heard that perspective, I'll actually go specifically from the CVC side, the folks who would invest into your startups. I have like one or two. The first one would be I think it's helpful to remind founders that just because they are B2B or they have corporations as their customers does not mean they are a shoo-in for CVC money. And specifically, what I'd like to remind a lot of founders is that even if you're solving a problem for a corporate, if it doesn't align with the overall strategy for that group, you're barking up the wrong tree and you're going to be wasting a lot of time. And typically where that plays is most CVCs are set up to help the corporation understand where their industry is going, not necessarily to help improve back office functions or the way the corporation itself operates today. It's really about seeing down the road, around the corner. And so, what I often see is a lot of folks who are building great HR tech solutions. They're building great, talent engagement and resourcing startups, and they target their generalist productivity. They're targeting corporations as their customers, and they come away really bitter and disappointed that the CVC wouldn't invest in them. And I say, well, it's because they're investing in the future of automotive and transportation and mobility. No one's saying your solution is not going to help out their corporation. It's just simply not their mandate, right? It's the same way a VC fund works. They have each fund has its own mandate. And then the second comment I would make is I would highly advise founders to come in with a pretty open mind on how to engage with the corporation, which sounds pretty obvious, but what I've experienced quite a bit is startup X meets corporate Y, comes and says, I'm raising a round. I would love for you to be my customer, right? And this is where, you'll see a whole variety in the market. But for me, some of the best CVCs are the ones that are thinking down the line, seeing how their industries are evolving. And so they want to put venture capital dollars into companies that by definition are too immature or too in a space that is not yet fully developed, where they may or may not actually be able to partner with you today. But instead, they have actually all these other levers they can pull to be able to help you. And I've seen time and time again, startup founder X underestimates how big a corporation is, doesn't realize there's so many other things that's happening below the surface. Actually, to Eric's point, automotive is one of those areas where, everyone just thinks they make cars, but actually they build a lot of different things. They have a lot of different services. And I see, folks will come up to an OEM CVC and say, I want to do this with you. And they said, well, that's not on the table.
Yeah.
But here are the 10 other things you didn't realize we have access to the data for. We have alliance partnerships. We have channel partnerships. Is that more interesting for you? And most times it is. But there are some founders who they come in too strong on just that one thing they over fixated before they got into the meeting. And then, they both left that first meeting and said, nah, no second meeting. Right.
Yeah.
Yeah.
Yeah. Well, the first impression is do your homework, right? Like
Yes.
figure out where, and how Eric was saying, be prepared. I see from someone on the QA, and feel free for anyone in the attending, if you have questions for the panelists, to pop them in the QA, but saying how to help startups, since most of them don't have collaterals. Well, get your collateral ready. I mean, don't go and reach out to anyone, even us, when we do shared risk, unless it's like unless you want us to build your product. But, if you're looking at us to support, you definitely need to have your collateral when you're reaching to CVCs or to investors overall, right? I mean, for POCs, maybe they can have the idea on a napkin, but even then, no. Okay.
My advice is understand the company you're pitching to and where you can fit in. Make the engagement, if the corporate's offering the POC option, which we do, if there's a business unit that has a high interest in the startup, we'll actually fund the proof of concept, non-dilutive funding. We really want to just do a deeper vetting of the technology and the team. But the startup, like Kevin said, have an open mind and also be prepared on how you can make it the POC as painless as possible for the corporate, so you can move on to the next step. And for us, the next step may be another POC and get your technology into our development process and the mass production product, or an investment. So understand your customer very well.
If we agree, Rick,
I'll actually say for the founders, Jess is absolutely right. Do your research, but also don't worry too much, because there are things that only someone who spent a decade plus in the organization will be able to tell you. We're helping to set up a new mobility fund in the Northeast. And I found out in one of the meetings as I was working with them, they actually own their own captive life insurance group. And that's not something you can really find out by going on their website. It's not something they really advertise. They're like, oh no, but this is something we have. And we're really, we're interested in investing in these areas, and this is how we can help. We have actually a subsidiary that does all this. And I said, wow, I never would have known, right? So just be open-minded. Sometimes the over-research causes the over-fixation on one specific area. Come in and see what they're willing to give to you and provide for you, and then work around that.
I mean, obviously, I think, as you're saying, be open-minded, but at least have the base, right, of those discussion. If it goes into more of a POC, or like, as you were saying, like, is it a channel partnership, right? Is it a testing from that side? That's something to equip. And to that, when you do, just to dabble more into the collaterals that you would present, Eric, you're mentioning a pitch deck. Would you have like a data room, a video of the product, of a demo? What do you prefer to digest, right? That information.
So we so when you come for an initial meeting, at least have some pitch, even if you don't have an NDA, have a basic pitch deck. So you can get to the next step of executing an NDA and having a further discussion. But we typically work, seed is probably the earliest we'll do, and they have to have a minimum viable product, with some decent amount of funding. You have to have something tangible that we can actually see and evaluate. So that's kind of what, we've had some startups that have, some great ideas, but we like to see have something that is actually built and you can measure and look at.
Yeah, no, for sure.
Yes.
And
to that, same.
Stefan, so we do have one question in the QA asking, and Eric, you've mentioned in terms of what kind of traction you're all looking at to see in the companies. You've mentioned yours. Stefan, could you elaborate a little bit on that on your side?
as I mentioned, we're more on the hardware side. So even though we are looking at some companies in the startup in the software, again, we are looking for a maturity stage on the at least to get some MVP, minimum viable products. Even though it's not very good and it's more like a POC than an MVP, but at least they have an idea about what they want to sell and how even how they want to sell it as well. So it's not the first, we say, very early stage, because startups call pivot, right? Which is nice, but we call this changing, spinning, right, on our side, and
Yeah.
it's pretty difficult sometimes to track a startup for, I would say, big companies. We're not that big, right? We are mid cap, where we are in a pretty linear, right? We can change, but we cannot just completely pivot from 180 degrees, or even 90 degrees is very difficult for us, right? So that's why we need a certain level of maturity, because it's, if we see each other once, the second time is different type of business model, things are changing again. We are going to have a brand new features. We have new markets there and everything, things change. This is very difficult for us to assess this company and to make even some doubt, even though the innovation is there, the imagination, the creativity is outstanding. But for us, we need some to have some concrete, as I mentioned, some concrete facts about how far your creativity and your innovation is ready, at least to get some attraction on the market, but also how far you are also ready to have your maturity to go through, because we're all interested about MVP, but also to make business together, and the scale up part for us is very important.
Yeah, so more than an MVP, do you need, so one guy on the QA through his metrics in terms of, he's been around, well, I don't know if we call it still a startup, it's been around for 15 years, but is cash flow positive, has $1 million in revenue, no investors. He's asking if he's in the right place. Well, I don't know if you're looking for funds, but is that attraction for you, like in terms of like ARR, Stefan, like you would want, like, you know, outside of the MVP, having some,
Yeah,
you know,
this is we say, okay, I don't know what kind of product it is and everything, but as a
SaaS,
first look,
backup and disaster recovery.
okay, disaster recovery, yeah. For what you said for us, yeah, is a pretty sound, I would say, in terms of on the paper, sounds pretty nice for us to look at it, definitely.
Mhm.
Yeah.
Yeah, so he's looking for growth, so maybe a POC for there. How about you, Kevin, on your CVCs, the startups that they're looking at in terms of traction? Is it mostly looking at a validated product, have some ARR, you know, consistent in the $1 million plus? Like what?
So actually, it varies quite a bit, fund to fund, and the fund strategy depends on how much money they got the board to approve, right? The more money you have, the later stage you can go, because you have the ability to write bigger checks. The less money that was approved, the earlier you have to go, because, you know, you're a small part of a bigger round, right? And so check size and round size all matters quite a bit. So we have variability across all the different funds. I would say most of the sweet spot for us is post MVP, could be what may be 1 or 2 pilot customers already. You could still be figuring out your business model, starting to get ready to create that recurring revenue or finalize that business model itself. But I'd say most CVCs, where they really like to play these days, is Series A, Series B, where there's still risk, it's still venture capital. There are ways they can help you scale, which is what corporates are kind of the best at. But you know, there's no longer that, there's less technology risk, right? It's already been proven to a degree. And I say less, not none, right?
Right.
And for us, again, you know, we emphasize that there's nothing strategic about a company that goes out of business because they ran out of money. And so we often insist and try to make sure there's a very solid syndicate around us with each investment, because it's not the best technology that wins most industries. It's not the best leader or company. It's usually the most well-funded. But of course,
Yeah.
those are all sort of related to each other to some degree. And then there are obviously the huge failures that we're all familiar with as well. But one of our big goals is, hey, don't invest in something where you end up becoming the sole provider pretty quickly, because no one else wants to invest in them, right? There has to be external value as well.
Cool. Well, thank you guys. I know we're a minute over. So if you have any, lightning round of 2 keywords that inspire you in your current position, and that can inspire other investors in the room, and then also how can we stay in touch, or if you want to stay in touch, obviously I've linked you all guys up, but
Yeah.
if you want to share it with others, how do they reach you?
Yeah, look me up on LinkedIn. I happy to connect as many people as we can. One great way we get deal flows through our network of startups and VCs. So always looking to connect. And I guess my advice is, be passionate, be persistent, and don't give up. And like Kevin said, have an open mind.
Cool, thanks. Stefan?
Yeah, yes, with the same LinkedIn is a good one. I will be at CS Las Vegas, so we can also, if we can exchange before, we can even set a meeting if there is any interest there. Be persistent for sure, believe in what you do, but also be pragmatic about what you want to show on top of Mega's dream about what you can bring as well, right? So, which is difficult, of course, right?
Nice. I like the
But don't
plug
give
on
up. Yeah, don't give up. Yeah.
Thanks. How about you, Kevin?
For those of you I'm normally based in San Francisco. I'm actually in a New York City hotel right now because I'm actually here for New York Tech Week. I have a panel on growth hacking I'm doing tomorrow in the city, for those of you who live around in the area and are building specifically CPG products. But then otherwise, yeah, absolutely. Please reach out to me on LinkedIn. Should be pretty easy to find.
Yeah. Well, thank you all for taking, some time out of your busy day